Subjects. So in the meantime, I'm testing some EAs and also the history downloader, all for free, so I can share them in the Discord server for everyone to join. This will be the more or less I'm slowly, uploading things, stuff, good sauce, everything needed for everyone to be able to make money 100% automatic. But today we are here to share my view on the gold market or the XAUUSD price. So here we have a not very clean chart. So let's take some of my boxes. But here in the 4-hour time frame, we can see clearly that we've been having especially a start, and we could say until October, a very bullish year overall. This was a very complex year to trade if you are a counter trend trader like me, or if you don't like to only hold buys and wait for appreciation. That will be something normal if you are talking about gold contracts, futures, or maybe also miners. But XAUUSD is more volatile, it's more active and dynamic, so I was able to use all this data to perform extraordinary this year. There's all the results in my Discord. I've been sharing all the sauce I have, mainly because I tested I created 2 algos this year, because as you can see we have big push. Let's go to a clean chart and to the daily to have a better understanding of the trend, because as you can see here we have the range period in the orange box, and after this big push, let me show you which one. That big week was during December of last year. A very unusual move. It was in a Sunday. This move was in just one day. You broke all-time high, the previous all-time high, and then you really drop more than 100% of the pricing. Was in 16 days, 15 days. That's a very hard pressure. In this case, I don't have the exact data on why this happened. It was on a Sunday at market open. I was actually trading. I have a video on how I made money on the move. It was very easy to make money because you had the retracement the same moment the move happened. So once this was the top, price just fall off. So it was easy money, to be honest. But the pressure over the gold value was very weird at that point, because rates remain at 5.5%, and even though the Fed stated that they will start reducing maybe in February, that it's a speculation, and we need to consider this for future reference, because the first rate cut happened in September, and until that point markets started really reacting, because before that we have a very bullish 2024. We have the classic range in January, but once February starts and the liquidity starts entering the market and activities in companies, like, if you're a retail person or a company, usually January is a very, you tend to keep money, you like to, let's I forgot the word, spend. Like to spend. So in this situation, the market or the price of gold and the investors decides that, okay, nothing is changing. Actually, the situation in USA is getting worse. So here they break the range they pretty much created. This remained as the all-time high at this point, because really, even though it was a very weak move and maybe some brokers don't even show it, it happened. I have orders at this price in this date in 2023, so it's something you cannot bypass. And let's just move, put a simple line and move to the other side, where the price action unfolded during March. Here, pretty much with a lot of volume, these are daily wicks. We broke the all-time high and we remained for some days here ranging and retesting the previous all-time high. So it's very important to keep a very basic follow-up of previous zones and high liquidity areas like this one, because price will react to this level at one point. USD is on the verge of recovery, so at one point the retracement can be very aggressive, and you can expect these two zones. You can see these two zones with tons of pressure on and liquidity, and here there's a lot of people trapped because these two moves that, let's put it as a red area, these two moves that follow up the push, well, the two moves that are in between this high liquidity area are very aggressive. We have candles with a lot of power of or money, so it's a $40 move, $46 move. So to move the price that hard, you need a lot of players. Like not even a billionaire can buy all the gold in the world can do, well, all the gold he can buy can move that hard the price and keep it up. This is the best example of a macroeconomic trend, and that price will do whatever it wants based in the facts. So we knew that at this point the debt and inflation in USA was rising. We can check the data, the unemployment also was rising, so data was pushing the narrative that the Fed was not taking the correct measures and that they were pretty much wrong after the COVID. They did a lot of things to prevent major catalyst. So I was just chilling. I'm not better than the Federal Reserve or than any other economist that has the experience, for example, of Powell. So I was just like tempted to see how this unfolded, and as expected, like you cannot, if USA, as mentioned in previous videos, if USA is taking hits, you cannot expect the price to drop or to have really like here. You're pushing and recovering, you're pushing and recovering. This is an M pattern. You can see the double top, and we didn't retest this area. So here price either goes back or we are gonna retest this area. These weeks are very important for price to retest. They tell a lot of, you can learn a lot about only the weeks and following the price, how it manages those areas. So the difference between, for example, here, that we have the first range period. Here, of course, we have a range period. It's very clear. But as always, I mentioned the data shows until, well, 2004 to 2024, April, May, June, and July, price slows down. It's very clear. That quarter is not very promising for investors. Maybe they chill and take vacations, other issues. I one day will find out what's the data behind this. For now, it's just a theory backed up by the data I have from my algo and my testing and trading. But as you can see, once price stopped the range around August, we broke these two highs that we had, because pretty much this was our previous all-time high. But at the end, we managed to break it almost weekly. So this was a very unusual year. This is one of the most unusual years to be a trader, because gold never broke all-time high two times, or I don't think even, yeah, in 2011 it was two times, and then it dropped. Here we are talking that price broke many times, and we're yet not recovering the total move. So we can consider this as the 2024 range, this green area. So let me measure it. Let's say here February, talking about an $80 range, a trend of $80 with really not retracement. Like even at this point of the range, you are not giving a 50% retracement, or you are not retesting this area that has tons of people trapped. So we have still very high pressure to the downside. Also, investors might consider this price of gold very high and unattractive. And following the data, and as mentioned, always keep the facts with you. Here we have pretty much the events calendar. So for now we don't have much, and next week we don't have also a lot to cover, but we need to keep following every type of data they provide us. I'm only following right now USD. I usually only follow USD due to the nature of my strategy that it's only based in show USD for now. So what I'm looking for now, it's, as you can see, when price is bullish, is very slow, but takes its time, but it can in 1 year pump your investment $80 or get you an $80 retracement. I'm, as a counter trend trader, I'm very capable of taking advantage of every retracement to clean my orders and stay in the market. That's mainly the reason I created B3, because I needed more power or more versatility when this type of trends happen, because this is a killer move. This trend with no retracement, this $22 trend, you're having, as you can see, a almost $6 move versus a $22 trend. So that's not a 50% move. So you need to be able to at least reduce your exposure in these zones until you have a bigger retracement. So as you can see, this is the whole move before the range period is almost 45%, $45 move. And you have, let's take it from here, an average of $14 move. So it's of course not a 50% retracement, but you can still work with 30% or even 25%. So the idea is, even when price gives you like 2024 trends that really break all-time highs, do fluctuations in the markets, uncertainty, because we also had wars in these periods. It was not only COVID. So we have a lot of data to really understand why this trend happened and why the recovery is taking too long, because I normally use 2011, the 2026, 2008, and the unfolding and 2011 that it was also a debt crisis. But that was different because it's not the same when you have a economy that it's slowed down because of human factors, like pretty much this scam that happened in that year. It was wild, but COVID is just wilder. It's something that there's a lot of theories. I don't care about that, but for me, it's something that we cannot manage. At least I cannot manage to prevent it or to anticipate. So governments showed us also that if you want to artificially create this, the consequences will be catastrophic or can be catastrophic. We could say that USA at one point was really in trouble of we could say of bankruptcy as a country. The only time that happened, let me show you. I think this chart. Oh yeah, we have it here. This is 2011 after the drop, or the drop happened because the USA was able to pay the debt. They announced that there won't be any major issues with the debt or with all the triggers they need to unfold after the house crisis. So as you can see, price reacts very heavy and drops because naturally investors will like the dollar versus the gold value to the yields. Gold, you need to wait for appreciation. And as you can see, after the drop, we had a big period of range during 2014 to 2019. So we are talking years of range period. And the reality is that you want prices like this, you want markets stable, because that means overall economies are doing good, countries are doing good, there's no major wars or impacts in the lives or daily lives of the humans. So once the COVID happened, again, dollar taking the hit. So it's natural. You need to just be able to understand the simple basics of prices taking hits against the dollar. Gold will be the reservoir or the safe haven, as they call it. So as you can see, this line is the previous all-time high that was broke actually in 2020. Also as expected, because they were printing a lot of money. So the devaluation for the dollar was very heavy. Then after some measures, the COVID vaccine announcement and all of that, I guess markets expected a very heavy recovery, an instant recovery, because we dropped a lot of the move that we had pre-COVID. Oh, sorry, during COVID. But again, the recovery was not very clear, so price again retested actually 3 times in 2 years, 2022 and 2023. Our previous all-time high that will be marked here around here. We managed to retest and build a new one here. But as you can see, the same year, we had this week that pretty much broke this liquidity. That what happens here is big boys know that there's a lot of pressure here because people will tend to want to buy once price already broke an all-time high. So they took that that liquidity to the downside to create this retracement. And again, in the same year, you're recovering the whole move. So pretty much we broke again, we drop again, we break again 2 months later. So really the price action was very clear that gold was very strong against the dollar, and only data. As you can see, we've been tracking the data, so I knew at this spot that every retracement was key for my strategy to hold the value. Even if I had to hold the $80 move, my strategy will be making money and cleaning this range. But what I wanted to build was something more dynamic, that your money is working every single move of the market. Like, don't just put a lot here and wait for the retracement here, like, or just don't buy. Even if you buy here and you just hold to the top, and assuming you sold in the top, you have your money really waiting. It's making money, of course, but you can be more dynamic. You can make even more, and you can be actually re-entering in some zones. Like, I feel trading is better than investing for investing. It sounds weird, but I will explain it in future videos. So at this point, 2025 will be what we consider the recovery year for the dollar. So if the data and everything continues to go low, as mentioned, the first we have is unemployment and then ISM. So if this value keeps going down, you can expect the labor market to be under recovery, something that is very good. But also we have the Trump, he goes to work again the next year, so he's very vocal, as I always mention, so you also need to track him. It's not a joke that I say it, it's a reality. People with power move markets, and he's, I guess, in history one of, or if not the biggest talker and the biggest mover of markets with single tweets, you know. And now that it's paired with that disgusting parasite, you know, it's not a very good idea to forget about Donald Trump. So everything that he says, does, and whatever he takes action will affect the dollar price, good or bad. So remember also that usually when price reevaluates from very long trends, it's very aggressive to the downside, because here it's buy and hold, and people can be taking positions. But after here, for example, this is a sellout. The people it's selling contracts or is closing positions, so that's why it's very aggressive when you see movements to the downside, that it can take 8 months to create or build this trend, and you can destroy it in 1 day. Like the 2020 trend was destroyed in 1 day. Like, well, I'm exaggerating, but it's in 2 days pretty much, the big candles. But look at this candle, it pretty much destroyed everything in 1 day. So from there you need to be cautious. If you see big wicks, just try to keep either a good stop loss that will prevent you, because there will be also slippage at that time. And also don't wait only for New York sessions or other. That move in 2020 happened during London session opening, so any session can push price to the downside if it's needed, and for the upside it will take its time. So for now, just expect the range, and any news will drop it. And that's it for you for today. Have a good day, Jews.